Hey folks, see Rachana Ranade here. The other day one of my friend was telling me that whenever he applies for any company's IPO, there are only two outcomes. Possibility number one, he never gets an allotment. And possibility number two, just in case if he gets the allotment, the IPO generally lists in losses. And that was when he was asking me, is there any insurance company, something maybe like Canara HSBC Life Insurance Company or any other insurance company, which gives us insurance against IPO losses? I said, how, next level creativity. Huh? The answer is that there is no insurance to protect you from IPO losses. But then what's the solution? Solution is very simple. You have to do a good analysis of any company before you apply for the IPO. And this video can be a very good kickstarter for your IPO analysis of this company, which is Canara HSBC Life Insurance Company. So before we get started with the video, we have to ensure that you know the answers to these 3 points. Which 3 points? Number one, solvency ratio and its impact. Number two, persistency ratio and its impact. And number three, revenue and PAT growth. Before we move on, one final reminder for the Har Ghar Investor event at Hyderabad. Just one day to go. The event is tomorrow at 12 noon. It's going to be a very exciting session. I'm going to talk about how to use AI for fundamental analysis. I'm going to tell you how AI can be used to analyze even Nifty or any other index. It's going to be a very, very educational as well as entertaining session. So please book your tickets. Link is there in the pinned comment and in the description box below. Now let's get started with some basics as to what does the company do. I'm sure with the name only you have already understood that it's a life insurance company. Okay. It will be licensed and of course governed by IRDAI, which is Insurance Regulatory Development Authority of India, right? Now, what about the main promoters? Two major promoters, one Canara Bank and one is HSBC Insurance, where Canara Bank holds 51% stake and it is the fourth largest public sector entity or bank by total assets in India. And if I'm talking about the second promoter, it is HSBC Insurance, which holds 26% stake in the company. One more, not a promoter, an investor per se, which is Punjab National Bank, that holds 23% stake in the company. By the way, just for your information, it is 100% OFS. We'll talk a little bit more on that. But all are the selling shareholders. Canara Bank is going to offload stake. Punjab National Bank is going to offload stake. And HSBC Insurance is going to offload a very small stake. But yes, they are also going to do that, right? So I hope you have understood some key points. It's an life insurance company. Major promoters, Canara Bank and HSBC. Now let's understand about one more important point as to what could be their different products. See, mainly it's life insurance only. Health insurance is like a very chiller, very small part of their products. They offer plans like saving, endowment, term plan, pure protection plan, which is then retirement solutions, group credit life protection, JJBY. All these are different insurance products, life insurance products primarily that the company sells. Okay. Now, if I were to understand one more very important point as to how do they generate business, from where are they actually getting the premium income. So this is basically weighted premium percentage that you can see here. So if you check, let's say we are talking about year ended 25, Canara Bank accounts for 72.52% of the weighted premium income that they are getting. Okay. Has this number increased? Just check this. From financial year 23, it was 66%, up to 69.94% and up to 72.52%. So can I say this company gets a lot of business from where? From Canara Bank. So again, you can imagine something, a customer walks into Canara Bank and they ask that customer, do you want insurance, life insurance? We have a lot of products, and that's how Canara Bank will sell their insurance policies. Okay. In return, of course, Canara Bank will also earn some commission. Okay. So by the way, this is typically called as bank assurance. Whenever a bank sells the insurance policies, that term is called as bank assurance. 72% from Canara Bank, HSBC roughly 13%, other bank assurance relationships 0.9%, but roughly 85% basically is coming from Canara, HSBC and other bank assurance. Then if we talk about revenue from their lines of business, again, two interesting terms to be learned here. Maximum revenue that they are generating is from linked non-participating life insurance. So what do we mean by linked policies versus non-linked policies? Linked means which are linked to the market. Basically, a great example can be something like ULIP, which is a market linked. So linked policy. And when I say non-linked, best example could be term life policy, which is not linked to the stock market. Then there's one more word here, which is non-participating. What is non-participating? If you basically take a policy, life insurance policy, which is non-participating, what will you get? You will get the sum assured. Okay, but you will never get bonus or something like that because it's a non-participating. If you have opted for a participating policy, then whatever profits the company gets, that those gets distributed in the form of bonuses. Okay. Well, the company currently has only one participating policy, 9 non-participating policies, and maximum revenue, topmost revenue income stream for them is linked non-participating life, followed by non-linked non-participating life. Okay, it's very clearly evident both top two are non-participating, and the fact that non-participating policies, number of non-participating policies are 9. Okay, so I hope all in all you have understood a lot about where does the income come from the product base, but now from the geographical base. If you see, Karnataka, Maharashtra, they are the double digit revenue contributors, and followed by Kerala, Uttar Pradesh, and Tamil Nadu. Now, honestly, nothing too much to talk about in industry analysis. You all know 2 points. Number one, India is highly under-penetrated when it comes to insurance. So, is there a lot of scope for this company or any company which is into insurance? Answer is obviously yes. Number two, if I were to talk about the latest announcement about GST, everyone knows that as well, that GST rates have been cut for insurance from 18% directly to zero. That's only for individual policies though. But is that going to have a positive impact on this sector? Answer is yes. So only 2 points for the industry. Now let's move on with the 3 questions that we had discussed in the beginning of the video. Number one, which is about the growth rate in revenue and PAT. Number two, it's also about the persistency ratio, and number three about solvency ratio. So all 3 points we're going to discuss. Let's start with the very first one, which is about the financials now. If I talk about revenue has grown, you can see here, from 71,973 to 80,274, all rupees in millions. Revenue has grown at 5.67% CAGR, PAT at 13.25% CAGR. You can see all the PAT numbers here, revenue numbers here as well. So that's about the PAT growth and revenue growth. Not mind-blowing per se, single-digit revenue growth, but PAT has grown at a faster pace. That's a good point. Now, if I were to talk about one more important point which comes under their key risks, and this is about persistency metrics. See, would you want a customer to be sticky? You would want that customer to be a long-term customer. That's what a business wants. So ideally, higher the persistency ratio is always good for the company. Look for any insurance company, it goes on decreasing. How much it is decreasing is important. And if you see here, if I'm talking financial year 23, 24, 25, has the stickiness improved? Yes. In the first year, earlier it was 75%, now at 82%. Even if you check 51.97% earlier, now at 57.74%. But does it go decreasing from year on year? So first year, it's as good as 82% of the customers are renewing their policies, versus by the end of fifth year, only 57% are renewing their policies. So persistency is less. So lesser persistency is treated as a risk for the company. Is that a risk? Yes. But is the persistency becoming better? Yes, that's also fair point, positive point. Now, if I talk about solvency ratio, solvency ratio, always remember higher the better. And if you see here, 23, 24, 25, it has been decreasing from 251% to 212% to 205%. Bad thing? Yes. 3 months ended, in fact, it has gone to 200.42%. But now let's look at the positive side as well. What is the ratio which is required by the regulator? Required by the regulator is, you can see here, at least 150%. So is the company way above that? Answer is yes. So I hope you have gotten the answers to all the 3 questions. If I'm talking about pending litigations, nothing much, nothing serious. I always say most important point is you have to check pending litigations against the company. In that, if you feel that the amount is extremely high, you have to be a little bit more careful. Now let's go on to the peer comparison. Now if you see, I'm just going to compare it with their top 3 peers. One is HDFC, one is ICICI, and one is SBI, right? So first things first, if you see WPI, that is your weighted premium income, of course higher the better. And if you see here, it is continuously increasing from 23 to 25. As at 25, it is 21,783 million. But if I were to compare this with HDFC is at 1,33,636 million. So is this very small as compared to HDFC Life Insurance? Answer is yes. Now even the second one, annual premium or annualized premium equivalent. So just to quickly share this, the meaning of this, whenever we have one-time premium policies, so just pay the premium once and you will be covered for next 20 years, 30 years, whatever. How is the revenue recognition done? So one policy, let's say, covers, or one premium covers 20 years. So there will be a formula through which they will decide that premium, how will it be accounted for over the next 20 years? That is your annualized premium equivalent. Now again, this is higher the better. So if you see here, it is increasing, agreed, but at 2025 it is 23,393 million versus HDFC at 1,54,790 million. Renewal business premium, how much is their renewals for premium? Again, higher the better. It is increasing, agreed, 49,000 versus HDFC 3,76,828 million. So is this very small in comparison with HDFC Life Insurance Company? Answer is yes. Now I'm not going to explain all these terms again. Let's quickly check for ICICI. You already know the numbers for Canara. So what we'll just check quickly. Is ICICI Pru high for WPE? Is this number higher for WPE? Yes. For annualized premium equivalent, yes again, and by a good margin, almost 3 to 4x. And same is the case for renewal business premium at 2,57,000 million. It's almost 5x of this. So ICICI Pru is also pretty big in comparison with Canara. If I'm talking about SBI Life Insurance, again, if you check only 2025 with 2025, 21,000 versus 1,93,000. I'm rounding it off. 23,000 versus 2,14,000. 49,000 versus 4,94,000. Way higher, right? So if you have understood, right, that this company, Canara HSBC Life Insurance Company, is very small as compared to its peers based on the top line per se, right? But what about the PE? Of course, bottom line, we did not discuss each and every profit matrix or other matrices as well. But if you look at the P, post IPO P is going to be at 86 for this company. For SBI it is 74. For ICICI Pru it is 73. For HDFC it is higher at 90. But even industry average is 79. So with all the peer comparison information that I gave, of course you can dig down deeper to have a better understanding. But as I mentioned, that this should be definitely acting as a starting point for your own thought process. I've told you very clearly about the peer analysis. P is in front of you. You are smart enough to take a decision whether this looks undervalued or overvalued, right? Now, if I were to understand objects of the issue, as I told you, it's 100% OFS. Money, whatever will be collected through the IPO, will go either to Canara Bank and HSBC Insurance and Punjab National Bank, right? IPO details starts today, that is the 10th of October 2025. Will close on 14th of October. Price band is 100 to 106. As I mentioned, it's 100% OFS, 0 rupees of fresh issue. So I hope with this you understood a lot about insurance, different terms as well. You understood a lot about this IPO. If you plan to apply or if you don't plan to apply, do let me know in the comment section. I hope you liked the analysis. If you did, please don't forget to share the video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.